Um, and so, welcome everybody. My name is Sue O'Reilly, and I am from The Positive Point. I am on a mission to teach individuals how to read a stock chart, which is the language of the markets. If you know how to read a stock chart, I believe you have a real edge in the markets. So my topic today is how a trading journal can help you master your trader's mindset. A little bit more about me. I have been doing this for just about 20 years. I'm always in an education mode. Oh my gosh, this is a lifelong journey of improving your skills and your knowledge. But about 7 years ago, the group in the States called StockTwits reached out to me and asked me if I wanted to run their Toronto traders and investors meetup group. And so I said yes. And I got to tell you, it was one of the best things I ever did. It was a volunteer push for me, but I wanted to share my passion for the markets. And when I took that group over, it had about 300 members. And by the time the group disbanded last year, it had pretty close to 4,000 members. But the thing that I'm most proud of is this right here, the 5-star review on Meetup. So 556 people attended my meetups month after month and were kind enough to leave 5-star positive reviews for the most part. So I love that. The Money Show folks in Toronto noticed my numbers and invited me to speak at the Money Show. So I've spoken at the Money Show 4 consecutive times. Last time was last September. Again, it's a well-run organization. I really enjoy participating with them too. So before we get into today's presentation, I just want to read this disclaimer. I'm always very thorough about this. The content of this meeting and presentation is for educational and illustrative purposes only. It does not constitute either investment advice or a buy-sell recommendation of any kind whatsoever. I, Sue O'Reilly, am not a licensed professional investment advisor. I'm making no recommendations to either purchase or sell any particular stock, bond, option, or security of any kind. Trading in the stock market involves a high degree of risk, and you may incur financial losses if you engage in such activity. My simple translation is, it's your money, they are your decisions and your outcomes. So thank you for your patience with that. It's always a little bit of a labor to read that. So my goal for today, I've got 3 of them. One is going to be how looking at the big picture to analyze the market can help calm emotional triggers and foster better decision-making. Goal number 2 is all about stock selection, and your discipline with stock selection and adhering to a defined list will help in your trading success. And then number 3, creating a feedback loop to foster growth and long-term success with your trading journal. So what's your most precious commodity when it comes to this space? It is your mind. Your mindset. Super important to cultivate your mindset and be aware of it. And I'm going to give you some examples in real life that I have had to achieve in this space. So a weak mind is going to equal weak results. You've just really got to remember that. Your number 1 psychological fear in the market is your enemy, I should say. Your psychological enemy is going to be fear. And at some point, we've been living through some pretty generous markets over the last 10 years. We've had very few corrections. We had the COVID crash, of course, and the correction when Jerome Powell raised interest rates at the end of 2021. But for the most part, it's been a pretty calm, upward trending market. But you always have to prepare yourself for the unexpected and that fearful moment when things are going wrong. So that all comes down to your process. Your process and experience is what conquers fear, builds confidence, and creates better decision-making. So I'm a very visual person. A lot of this presentation today is going to be about visuals. That's how I learn and that's how I explain things. And I also believe in keeping things very, very simple and easy to understand. So I hope I'm achieving that with you today. Every day, I strive to have an open and abundant mindset, meaning that even if I've read an article that says, the market's too extended, the earnings aren't coming in the way they should, the liquidity is drying up, you name it, it's always out there. I need to strive to have a very open mind. And when the market opens at 9:30 in the morning, I need to understand that I am paying attention to my charts and what price is actually doing in front of me. And I work really hard to have an abundant mindset where I know that my trading plan is thorough and process driven, rigorous, and I can trust it. I limit having that bias and can be an observer of what price is telling me. So I'm going to tell you a story. I've been doing this for quite a while now. And after the financial crisis in 2008, wow, I was really shaken. And I was telling the panel earlier today that even though my thing is technical analysis, I could not find a trade after 2000. I was so shaken by that financial crisis and what the results of it. It was pretty aggressive for a very long time. It got into my mind. It created a bias that I was kind of almost not even aware of. And time after time after time, my trade would set up. It would trigger, but I just didn't have the mindset to pull the trigger and go with the trade. I was really bogged down by that sky is falling bias, and it really cost me for a very long time until I learned that I needed to be an observer of the market and not a predictor. So I had to put my bias aside and strictly look and see what price is doing on the chart, and that changed everything. So train your mind to be calm in every situation. That's going to be your goal with your trading plan and your process. Program yourself to follow your trading plan and your rigorous process. I map out trades on the weekend and before the bell. So I do a lot of my preparation for the week on the weekends. I think it's really invaluable. And luckily, this is my thing. I absolutely love looking at stock charts. So it's not really a chore for me. But when the market is closed and my mind is quiet, I can really focus on every weekend. And I think this is a valuable thing to understand. I really study the major indexes, currencies, what's going on around the world. And in particular, I like to watch sector rotation. That's really important to me. And I can really see the nuances of the chart when I'm quiet and the market is not open. So I really believe that mapping things out when the market is closed, and for me, that's weekend or before the bell, is really important to making decisions that are not emotional. So nothing is happening by chance. I'm not winging it in any way. I'm always going to be prepared. And then I need to understand who I am as a trader. I'm not jumping on a stock that has already got a lot of momentum to it. Typically, I'm going to skate where the puck is going to be. I'm a true Canadian. This is Wayne Gretzky, one of our best and most famous hockey players of all time. And this is his quote: "Skate where the puck is going to be and not where it's been." And so this is kind of the essence of my personal trading plan. I'm stocking really high quality names in areas of high support and looking for the trigger that it might be starting to move higher. So today I'm going to share with you 3 big ideas that really made a big difference for me. Idea number 1, and I cannot emphasize this one enough, is see the big picture. So when I was running that meetup group, and the reason I think that people liked the group and I got those 5-star reviews was because every single month I would host big picture night, and we would step back and we'd take a look at the big charts. By the big charts, I mean the big monthly timeframes. And when you can understand those big charts, the big monthly timeframes, it really informs you as to the overall health and character of the current market. And so big idea number 1 that I wanted to share with you today is see the big picture. Looking at the big picture to analyze the market can help calm emotional triggers and foster much better decision making. So we're going to get into some charts. And for those of you that are not familiar with technical analysis, I'm just going to go over ever so quickly this graphic of a candlestick. And so this one here on the right side is a bullish candlestick. It means that this represents a period of time in the market that it was trading, whether it's a day, a week, a month. But essentially, the market opens down here. Let's say this is ABC stock. And ABC stock opened today at $1 down here on the open, the bottom of the body, traded all the way up to 250 and all the way down to 50 cents, but it closed the day at $2, creating a green candlestick and a bullish orientation to that candlestick and that chart. The opposite is true over here, where it opened higher and closed lower, so it's a red body. So when I look at this, I say green body, likelihood of elevator up is high, especially if it's at support. And I always want to remind myself psychologically, keep it simple. The simpler, the better. So when I look at those candlesticks, I remember all that is underneath the price action of that time frame are bulls and bears duking it out. And one side is going to win and one side is going to lose. It's just supply and demand, and the people underneath that particular stock buying and selling in that time frame. So I really try to keep my mind quiet and with these simple concepts. So here we are, we're looking at a very long-term chart of the S&P 500. This is a monthly time frame going back to 2005 over here. And this is a fairly recent print. So this is going to get into some of the concepts that have really helped me. So number one, what I want you to know is the S&P 500, which is a really good representation of the overall market, has been in this beautiful uptrend since 2011. My little blue arrow here, where the S&P created a bullish candlestick at this blue line. The blue line is the 50-period simple moving average. And look at how reliable the blue line has been to holding support since 2011. So this was 2008, 2009, and that diabolical sell-off that was so crushing to so many. And then the Federal Reserve stimulated the market, and the market started this uptrend right about here. If I had to define the one single spot where things really got underway, it was in the back half of 2011. So look at how the blue line has kept us safe. If you just focused on that blue line and seeing that big picture. So here's the COVID crash. And yes, it formed a wick and it did go below the blue, but look where it found its footing right there. And away you go. And then here's where Jerome Powell raised interest rates. The market didn't like it and it sold off through much of 2022, but look where it found its footing, right at the blue line. And this is where we are right here, right now. So understanding the big picture, super, super important. The other big chart that I wanted to share with you is the semiconductor space, because the semis have been so important to this market momentum of late, right? And so again, this goes back to 2005. We're looking at the big monthly time frame. And you can see by my blue line here where price got supported by the 50 simple moving average, and away you go. And every time it corrected, where did it find its footing? Right at that 50. So how confident am I going to be when I see one of my names, one of my stocks that I'm hunting for an entry for? How confident am I going to be when it starts to get close to that 50? I'm building my confidence as a trader. I'm going to be pretty confident because time and time again, it depends on the instrument. Of course, it doesn't work on every stock, but the ones that I'm stocking are going to be the stalwarts. I'm kind of in the Warren Buffett, Ray Dalio camp. My watch list is full of dividend kings, dividend aristocrats, Ray Dalio stocks, and Warren Buffett stocks. And those stalwart stocks are more likely to respect the 50 than new, I call them buckaroo stocks, like the AI stocks and stuff. So I'm blowing this chart up so that you can really see the big picture. So look at the footprint that was left behind when you understand candlesticks and technical analysis. This was the 2022 sell-off. So we're looking at the 5-year monthly chart of the S&P 500. We've got that sell-off through 2022, and then kaboom, I get the footprint that says I'm at the 50. All that history that I already know that the 50 is often support. So I'm stalking it here. This is where I'm skating where the puck is going to be. And sure enough, that lent support. And this is where we are right here, right now, for the most part. So understanding the big picture and seeing the big picture really helps you psychologically. Again, this is the semiconductor. I'm blowing up the chart. It's a 5-year shorter time frame monthly chart. And look at the footprint. Look at that beautiful doji. For those of you that understand candlesticks, a doji is indecision right at the 50. Beautiful, beautiful footprint telling me that the odds of this blue line offering support are going to be pretty high. And then what happened following that? Confirmation. So big picture, and this is where we are right now, sort of consolidating sideways. But I hope you see the benefits of looking at that big picture. And so through the drama of the Trump inauguration and things like that, here's my big picture. I'm blowing it up now to a 2-year chart monthly of the S&P 500. And I can chill because support is holding, right? This is where we are right here, right now. This was the month of January. This is February so far. We're okay. Now, can something bad happen towards the end of today and tomorrow? Yes. But understanding this big picture and this area of support really helps my mindset and keeps me calm and much better. I'm a much better decision maker. So looking at the big time frame, at least to me, preserves very precious mental capital. And especially this last month, because I'm speaking to you from Toronto, Canada. I'm a Canadian, and holy moly, all of that tariff talk really ruffled our Canadian feathers. I have no bias towards the administration whatsoever. It'll be interesting to see what happens. But in terms of the effect on our markets, it was pretty dramatic. And if you read our headlines here, oh my gosh, sky is falling. But here's a print of our major index here in Canada that I created this morning. This is the TSX monthly time frame. It's bullish. Who would have guessed? Who would have guessed that with all that rhetoric and saber rattling that our market in the month of February so far, I know it's early in February, but so far it's bullish. And support is holding here. So I'm a Canadian investor. I have some Canadian holdings. Most of my stuff is on the US side, but I do have a basket of Canadian. And this is really helpful for me to see and know. Keeps me calm, preserves my mental capital. And so the big idea number 2 that I wanted to share with you today is narrow your focus. Narrow your focus. Again, it preserves your mental capital. Instead of chasing down and researching the 8,000 stocks or more that trade on the US exchange, I have created a watch list of 100 names that I'm not going to say I know them all intimately, but I'm very familiar with them, and I have a lot of confidence in them because, as I said earlier, they're dividend kings. And if those of you that are not familiar with dividend kings are a select basket. I think there are about 54 of them that trade on the US market that have been paying their dividends for 50 consecutive years. 50 consecutive years. So they're very high quality. You've got to vet the list a little bit for volume, which I do. And so not all of them will make my list. I tend to circle the most liquid, like J&J and those kinds of names. Johnson & Johnson, for those of you that are not familiar with J&J. So dividend kings, how confident am I with those names when they come into that area of support? I'm very confident. Dividend aristocrats, same thing, but they've been paying their dividends reliably for 25 consecutive years. So they're not quite as exclusive as the kings, but they're pretty close. And then my go-to list, the top 10 holdings of Warren Buffett. Like, we all love Warren Buffett. I think everyone in the audience would pretty much agree that Warren Buffett is one of the greatest investor minds of our time. And so what I do is I take his list and I vet it for the top 10. This is his partner, Charlie Munger. Opportunity comes to the prepared mind. So I'm going to show you where the opportunity shows up. This is Berkshire Hathaway's top 10 holdings by weight. So I sort the list by weight. Apple's at the top, American Express. So So if we believe in Warren Buffett, these are the names that he has the highest conviction in. So that gives me a lot of confidence, right? And confidence, preparation, your trading plan, oh, so important. And so this is a chart of Apple, and this is a 10-year monthly chart of Apple. Or is it 5-year? Yeah, and it's more like 5 years. Sorry. So we're blowing it up a little bit here. Apple is Warren Buffett's largest holding, number one by weight. And look what happens to Apple when it gets close to that 50 on the monthly time frame. And I see a doji show up, and I can identify clearly this area of support, right? Perfect holding of support, a bounce off support. There we go. So the point that I'm trying to make is when you use a quality list that you really believe in, it really fortifies your trader's mindset and your ability to pull the trigger, your ability to stay confident. And so that's where I would give the positive point. And if you're part of my community, we were talking about Apple right here because of this formation. American Express, another example, 5-year monthly chart, second largest holding for Warren Buffett, 50. Beautiful support here. American Express comes in, prints a doji, away you go. There you go. Simple. It's visual. You can see it. I don't need to read an article. I don't need someone to tell me that the consumer is dead. They won't be charging anything. Nobody's buying anything. The chart is the chart. Believe the chart. And the chart lifts off that area of support and kaboom. This is where American Express is now. So this is where you get that positive point. That's why I call my company the positive point. I love that. So big idea number 2 is journal. So every time you journal and prepare yourself for a trade, you are telling your mind that you are thorough. So it's all about the subconscious mind. So as I said at the beginning, it's all about having that abundant mindset, but it's also when you stick to your rigor and your process, you are subconsciously telling your mind that you are organized, that you are deliberate, that you are disciplined. And so it really helps you become successful. So if anyone out there is thinking about winging it or not journaling or not really writing down your trades and having a trading plan, you're making, in my opinion, a big mistake. You're telling your mind that you're winging it, and the market is not a place that rewards people that are winging it. You have to be deliberate, and you have to know exactly what you're doing and why you're doing it. So a trading journal is key. So journal, plan, and execute. Trading journal is the mirror that reflects your true self as a trader and investor. It's not just about tracking trades. It's about tracking your growth, understanding your emotions, and transforming lessons into long-term success. It tells my brain that I'm prepared, deliberate, and thorough. Over time, if I do it over and over and over again with rigor, it really helps build confidence. And so here is how I do it. I have Evernote. I'm a big Evernote person. You can use OneNote, Google OneNote, whatever journaling product that you prefer. For me, it is Evernote. And look at how I organize each and every one of the months in the year. Gets its own notebook. So this was January 2025. 158 individual notes in that notebook. So not that I took 158 trades, but if I take action on any underlying stock, it is screenshotted and my checklist is allocated to that particular individual note. But along with that is I love to read and listen. When the market is closed, I'm listening to, there's so much out there on YouTube. We are living in an information-rich environment. We are so lucky as traders and investors, I believe, because there's so many great YouTube channels that you can refer to. And I'm always listening to everyone else's opinions. I have my select few that I really put a lot of stock in. And And as I read articles or get snippets of information, I'm putting it in my journal if it relates to one of the 100 stocks that I'm following. So then later on, if one of those stocks, and I'm going to show you one in a second, comes into my area of interest, I can go back and just search and say, why did I, not only is it on my list, but oh yeah, they've got a stock buyback program. Oh yeah. So I can go back to my notes and I can pick up all those little pieces of information that fortify my trading plan. So each and every month has its own individual notebook. And in each of those months, I have an individual note for every single trade or piece of information that I'm collecting about those underlyings. And this is it so far for February. So have a trading journal tool. Mine is Evernote. Yeah, so a trading investing journal is a powerful tool for mastering your mindset. Here is how I set mine up. So currently I'm stocking Chevron, CVX. So this is not making any recommendation whatsoever. It's falling into my trading plan area. And this is the checklist that I've created for myself. There are 5 steps that I must qualify before I take that trade. And then once the trade is taken, I take a screenshot of where I entered it. And I put that screenshot in my note. And I also put that particular chart in my chart list. So I'm looking at it and reviewing it every day. So some of you might not be as active. You can look at it every week or every month, whatever you choose. But this is my rigor and my process. So step number 1, determine the current state of the S&P market, like the posture trend, right? And know how the trend looks on the 10-year chart. So I step back and take a look at that big picture and how the current trend and the place that price is relative to these key moving averages that I like to use. And I want to see, ideally, I want to see the 50 simple moving average sloping up. So I will go check, 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 check. So have I narrowed my focus? Yes. Is it a quality stock? Yes. Check, check. So CVX, if you remember the list I showed you just a second ago, is Warren Buffett's 5th largest holding by weight of his top 10. It's also a dividend aristocrat. So I love that. I know I'm with high quality here in my definition of quality. Can I see the big picture for CVX? Yes, I can. I understand the significance and the power of the 50. Yes, yes. So now I'm going to start watching to see if that positive point candle starts to show up for me. Step number 4, do your homework. So I will always tuck into an underlying and understand my why. Why am I circling this? It's not just because it's a Warren Buffett stock. I also want to know what's the changing story there. And I know that as a trader, this is me. I'm skating where the puck is going to be. Okay, and it's got a nice yield. There's a changing story there. They acquired Hess. They're got international and they're well positioned for the long term. And so check, 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 and then believe the chart. As we were talking earlier in our panel discussion, for me, I don't care what anyone else says. When it triggers, I just believe the chart. And then number 5, when I'm in, I'm protecting the line, setting alerts, and getting, putting my stops in place. So this is what goes into my journal for each and every trade. Check, 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 check. I must fill in these boxes. So how much peace of mind does that give me when I know that I've been that thorough and that I've really studied that particular chart? And here we are with that Buffett list again. You can see Apple at the top and there's Chevron right here in the middle. So here's Chevron. There's the footprint from January. Look at, I've got the monthly time frame here. I've got the upsloping 50. There's the footprint, and this is where I'm interested. I want to make sure that at the end of February, this might get my positive point. So I'm waiting and I'm being patient. Chevron. And so when I'm journaling, I'm going to see the footprint on the big chart, and now I've switched it over to the weekly time frame because I'm going to make the decision on the smaller time frame with the larger time frame as my reference. And when you understand how to read a stock chart, that language of the markets thing again, you see that this is a doji at a strong area of support. And then this is what followed. This is just the other day. So this would get my positive point. And then I screenshot where my entry might have been. This is now we're going down to the daily, and I want to see it stay in that trend higher, or at least respect this lower area of support down here. So all of this gets screenshotted and it gets put in my journal. And then this particular picture with the box around it goes into my chart view, and I just review it every day. Is it still doing what I think it was going to do? Is it still okay? And then my results go into an Excel spreadsheet that measures output. So step number 1 is the journal and mapping out my trade and understanding exactly why I'm getting into it and doing that checklist. Number 2 is making sure that when I'm in it, I have put it in an active chart list that I'm checking on a regular basis. And for me, that's going to be every day. And then it's entered on an Excel spreadsheet where I measure output, because I'm always curious as to how many days I've been in the trade and the information that I get from that Excel spreadsheet. And so I hope I've demonstrated how a calm mind is your ultimate weapon against your challenges in trading, and that being prepared, and that A, understanding the big picture, B, working with a quality list, and C, tracking and having a checklist and journaling is really your best friend. I'm currently launching an Empowered Investor Pathway course. It's launching at the end of February. If you want, it's designed specifically for women, because I noticed that when I ran my meetup group, the women tended to kind of lay back in the background. And so I'm kind of on a mission to help women learn technical analysis and the power of being able to increase their financial literacy and make decisions for themselves. So if you're interested at all, you can email me at sue@thepositivepoint, and I will put you on the enrollment roster. So thank you very much. That's my presentation for today. I'm open to any questions you might have. Alex?
Ангелина, види меня. Okay. Yeah, so I'm here. Yeah, thank you so much for your speech. Actually, there was a lot of there were a lot of comments during your speech, and yeah, so there is a feedback that's awesome. Feedback from Sophia. So actually, let me ask you a question about. So you focused both on psychology and on a kind of discipline, right?
Yeah.
You during your trading activity. So what is prior? So psychology or discipline? What do you think? So, or it isn't possible to build like discipline without understanding how your mindset is working?
Your psychology is so important. I think that comes first, Alex. You know, I made a lot of mistakes at first, and I had to go through the road of hard knocks. And the more I was on my journey, the more I realized that for me personally, I'm very visual. So I'm going to play to my advantage. And my advantage is being able to see clearly on the chart. And to see clearly, I need to keep it as simple as I possibly can. So simplicity is a superpower. And so understanding myself and my own psychology, and that I'm not a quant person. I'm not I mean, you can see how thorough I am, but for me, it's all about the pedigree of the underlying stock, how confident I am in when it comes into that 50. And I really want to show you, like, historically, going back many, 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 many years, that 50 is more often than not going to be a strong area of support. Now, not all the time, and that's welcome to trading. You've got to deal with that. But having that clear understanding and all the experience I've had around trading stocks when they get into that area really helps. And so your psychology shapes your discipline, right? And I really want to be the best I can be at this. And I'm always iterating and improving and learning. But if you have the psychology to be, you've got to be gritty. You've got to really love what you do here. And I love technical analysis, and blending the fundamentals with the technicals is so powerful. So psychology leads to your discipline because you want to improve all the time.
Thank you so much. May I ask you if it's possible to become a really successful trader without journaling?
Not for me. So it's all about who you are. I betcha that there are people out there that can do it, because they're making decisions on smaller timeframes and they're doing things very quickly. Kudos to them. But I know who I am, and I know what makes me me, and I know what makes me confident and successful. And so for someone like me, a journal is essential.
Okay, and what do you think about this kind of new journals? I mean, some automated solutions on the market that are grabbing information from the trading platforms, and they created a kind of journals without even human participation. Is it
Yeah.
useful for the trader to use?
I don't want to. This whole AI push is going to humble all of us, I think. And so, maybe I've got something to learn there. But for me, the more hands-on you can be, the more, look, doing all of that homework and understanding the story that's changing under Chevron, for example, really helps me build my confidence. And so the more hands-on I can be and the more I ignore that kind of stuff, the better off I personally am. But having said that, AI is changing our world, and it's going to overtake all of us, I think, in this realm. But for now, I am hands-on, understanding and not taking any shortcuts.
Okay, so we have a question from Max Smith. I'm a technical trader and don't use fundamentals. Would you say good market timing is one of the most important things for someone who only uses technicals?
Yeah, absolutely. That's the only quiver you have in your basket, right? So I'm all about blending the two, because what an advantage to know that this high dividend paying stock that is owned by Warren Buffett is coming into this strong area of support. So knowing that fundamental stuff really, really helps me. So why would I eliminate that formula? But that's me. And so I know so many technical traders that are very successful, but you really have to have a strong discipline about, your plan and reading the charts, because you're eliminating something that I think is pretty positive. Technical traders, kudos to them. It's just not me. I've always got to blend the two. But yeah, so you've got to really be sharp about your timing, for sure.
You're trading stocks, right?
Mm-hmm.
Mostly stocks. What about other markets? I mean, crypto, for example, or commodities.
Yeah.
So, what can you say? Are there any differences in psychology, in the psychological side of approach to work with these markets?
Tons. So when you look at a long-term chart, so I'm Canadian, we're a commodity-driven country. Brazil, Australia, Canada, we're all strong with commodities. If you look at the big time frame on each and every one of those countries, we're starting to look pretty perky. And if you look at, I refer to ETFs all the time, like DBA, DBC. These are ETFs that reflect commodities, agriculture, USO. They're all starting to pick up here, in my opinion. And again, I'm a skate where the puck is going to be girl. So you're going to see a flat chart, but you're going to see a chart that's starting to lift. And so when I see that, and I see commodities starting to get kind of perky, there's a fellow, he was the chief commodity specialist at Goldman Sachs for like forever. I want to say 30 years. His name was Jeff Curry. He's no longer at Goldman Sachs, but he had a lot of stuff on YouTube about commodities and the commodities super cycle. And he refers to copper as being the commodity that is really going to be in high demand in the future. And so from there, I follow the trail, and Teck Resources, TECK, is one of Canada's top producing copper miners. It's also a Canadian dividend aristocrat, if memory serves me. I listened to a YouTube presentation by the CEO who calls copper the champion mineral of the time that we're in right now and coming. And so, combining those two opinions and then looking at a commodity chart, like if you look at the copper ETF or the index, it's in a really nice uptrend and it's coming into an area of support. So yeah, but I would circle in particular Teck Resources or a Freeport McMoran, something like that. So I'm always going to look for the dividend payer, the highest score fundamentally with a dividend at support. That's a dividend aristocrat, dividend king, Buffett stock. And so Teck Resources fits that profile on the Canadian side, and it's dual listed. So you can buy it on the Canadian or the US side. Not recommending whatsoever, but just saying that's my thought process. That's how I'm going to go about it.
Okay, thank you so much. So we have another question. Are there any key elements should traders include in their journals for maximum effectiveness? What are the core points that the journals should consist of?
If I'm going to narrow it down to one thing, and this is what I teach in my course, is understanding multiple timeframes. If you can harness the power of using multiple timeframes and screenshot that in your journal, because every once in a while the market gets wobbly, your position's going to get wobbly, and you're going to doubt yourself. But if you can go back to your note for that particular trade and you see those screenshots and you go, oh yeah. Like it brings such a much more certainty to me when I go, oh yeah. Okay. Yeah, we're good.
Mm-hmm. Okay. Well, so we have only another question from Richard Wills. Why not just trade the ES and NQ? I do not completely understand what is meant, but maybe you do.
Are you talking about futures, like the S&P futures?
I'm not sure. Okay, let's skip this question, unfortunately. Or maybe Richard, could you please explain us in a comment what is meant by this question? In the meantime, let me ask you about how to. So you are using Evernote, right, as a universal instrument for journaling. Could you please advise other instruments you use, like to provide your trading? Maybe some analytics tools, maybe some I don't know.
Okay, so I use, oh my goodness, I've got some favorite websites. My number one, finviz.com. It's amazing. Oh my gosh, it's so information rich. And when you learn how to use Finviz, and it takes a while because there's so much there, but I can't say enough about Finviz. I'm going to move away from a particular website and I'm going to say, sometimes when I see an anomaly in the chart and it's the weekend and I'm doing my homework, and now I've spent my time with my homework and I'm really, really clear about my what I see in the charts. You know what I do? I open QuickTime and I create a little video where I am explaining to myself the chart and why I'm so interested in the chart. And then I will put that little movie that I created for myself in my Evernote journal. So again, when the markets get wonky like they like to do, and I feel a little uncertain, I go back to my movie that I made for myself and I go, Sue, remember? And then I go, oh yeah. So I know that sounds kind of, but I'm telling you, yeah, it's amazing. I love doing these little movies for myself and just sticking them in my journal.
Mm-hmm. No. I just it's fantastic, a fantastic idea because the modern technology they're providing a lot of opportunities, like to save the information, to make some analysis and video. Save video is a good idea. The video for the future, for you of tomorrow, right? Right. So it's very productive and. Myself, so I have some psychological practice, and sometimes I do recommend to my clients to record a message to the future them, right?
Yeah,
So they are happy, or they shouldn't make some mistakes or something. So it's really productive,
yeah.
right? May I ask you about AI? Do you use any instruments, AI-driven
It's
instruments?
funny you should ask that because I hosted an event maybe 3 weeks ago with my meetup group. My meetup group is called The Positive Point, and I do that just volunteer for free. And I said, how can AI help you create a really high quality watch list? And I went to ChatGPT and I said, ChatGPT, what are the 10 most profitable companies in the S&P 500 for 2024? And ChatGPT in a second went bing, 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 bing. So think about that. The S&P 500, 500 of, so by choosing the S&P, I've eliminated the problem of volume, right? Because the S&P, if you make it into the S&P, you're going to be a high volume name. And ChatGPT just gave me the 10 most profitable companies in the S&P 500 for 2024. So we know that they're solid uptrending companies. And now I'm just going to take that list and put it into my charting software and say, okay, which one of these guys does that support? So AI is going to, I think, I think right now, if you're learning how to do this in 2025, you are going to be the environment is so amazing for you to be a really successful trader. There's just so much out there for you.
Absolutely. So the third opinion, the fourth opinion from the side of AI is really important. And I uh, I asked last week, so there was a webinar with Agnieszka Wood and Brad Steinbarger, and I asked him about the role of AI in the future of trading psychology, and his opinion is that yeah, maybe AI will not replace trading coaches and trading psychologists, but the major value AI provides is that it helps traders to analyze tons of information and to choose the right portions of information for himself. So that's a good instrument.
Yeah.
Fantastic.
Yeah. It's going to change all of our lives for sure. So embrace it and use it to your advantage. Like, it shortened my work that week. What are the 10 most profitable? Here you go. And then I inverted it and I went, what are the 10 most undervalued companies in the other? You can ask it any question depending on who you are and what you're looking for. It's amazing and it's free.
It's free, yeah, and it's absolutely accessible for everyone. Okay, Thank you so much, Sue. Thank you for your expertise, and thank you for your point of view, your positive point of view.
Thank you. And my website is under construction again right now, so it's not great. But if you're a woman and you want to learn this stuff, send me an email and we'll see if we can enroll you into my program coming up. You'll enjoy it.